Time now for our Financial Focus. Analyst Steve Budin joins me now. We had this election over in France, and a lot of people followed it, but why did the markets care so much about this?
Yeah, the markets were very interested because the candidate that was running against the winner was a French nationalist, and the centrist candidate, Macron, won. Now, the French treat their elections a little bit different than ours. So they don't vote for their Congress and their president on the same day. So they're going back in a couple of weeks to vote on their legislature. So depending on how that turns out, it'll be indicative of whether Macron can get his agenda passed. Now, the markets didn't react as much as I had expected. I think the markets are saying, well, now you have a kind of a status quo candidate who won, and that the status quo is what got France and their problems to begin with. So it was really a lesser of two evils that won.
And on the other hand, his opponent, Le Pen, she wanted out of the EU, which could have had all kinds of ramifications.
Yeah, and this has been a multi-year effort by her party. I mean, they were single digits a few years ago. Now they got 35% of the vote. So clearly they're not going to be going away anytime soon. And I think the markets are expecting the legislative elections may reveal that. Okay,
on now to another subject that's, you know, between men, right in our wheelhouse here. We're talking handbags. But this is a big deal here. Coach looking to buy Kate Spade for $2.4 billion.
Right. This point is for Dana, just for the record. Yes. Now, what's interesting about this acquisition is you have Coach, which is a traditionally high-end brand, buying more of a millennial brand, Kate Spade. You can see $2.4 billion is a nice price tag, but you're seeing some of these older established companies struggling to reach out to the new generation. And instead of them trying to reinvent the wheel, what Coach decided to do was buy an existing company that's very successful with millennials.
So if you're a big fan of Kate Spade and maybe not Coach, the question is Coach now going to screw up the brand? Right.
And that's the $64,000 question. Usually with these types of acquisitions, the brands will stay the same, but you know, if you're buying Kate Spade, now maybe what you'll do is you'll get an advertisement. Maybe you'd want to take a look at the Coach products, and you could order them online, on your mobile phone, what the millennials are used to doing.
Okay, and finally, the man everyone in the market listens to, Mr. Warren Buffett, had his annual meeting. What came out of that?
Always an interesting experience when Mr. Buffett gives his meeting, and he had some interesting points. The first one was that he is a big Wells Fargo stockholder, and he said, you know, corporate governance from a few months ago with Wells Fargo is totally unacceptable. He also said that the health care bill that just got passed gives some interesting challenges. And most importantly enough, he said the U.S. economy is still going along okay. There'll be some ups and downs over the next 10 years, but interestingly enough, his opinion is it's better to be in the stock market than the bond market for the next 10 years because interest rates are so low. You know, you could buy treasury bonds nowadays. They're safe investments, but you're only going to earn 2.5% on your money. He says, you know, he's always been optimistic and he's been a great patriot. He says, invest in the United States economy. You should do better than that over the long term.
All right, that's a man who knows his stuff.
Yeah.
You as well, sir. Thank you as always for your time. I appreciate it. All right, we'll be right back.